Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin. So, an explosive move is going to be incoming for Bitcoin within the next 48 hours. Why 48 hours? Well, that is because we have our next FOMC decision on Wednesday. Now, while I do plan on tomorrow getting a specific FOMC video out, talking about everything you need to know about the FOMC, what I think is going to be happening with the interest rates, what's going to happen after the FOMC meeting, I wanted to approach the markets today from a purely TA perspective and update what I think is going to be happening in the month of May and this week for Bitcoin. So let's dive into the charts. We'll start off in the lower time frames and work our way up to some of these macro time frame charts. There is also something new that I do want to talk about, a quadruple fractal that's currently playing out on Bitcoin, and the last time this happened we had a 52% drop. So stay tuned to the end. As always, if you do enjoy the content, make sure to leave a like and a comment. Let's dive right into this though. So starting off on the daily time frame, one of the most significant things that we warned you about recently on Bitcoin was this bearish MACD cross up here at 30,500. We also highlighted every single time since the bull market top what happens when you get these major MACD crosses above the heart line. They almost always led to massive breakdowns to the downside, apart from quite recently we had one data point over here where we had a slight breakdown and then a double top in the market on the MACD. However, right now, like we've been talking about, we're getting that beautiful continuation back down to the downside since 30,500. If we do draw our Fibonacci from our swing high up here down to the swing low, you can obviously see the markets have been rallying for the past week or so, and they beautifully reverted back into the golden ratio. So this was looking like a confirmed textbook dead cat bounce after we did revert to the 618 and had wicks up to the 786 Fibonacci, and now we've got a bearish engulfing candle on the daily time frame, breaking through the 618, breaking through the 0.5, breaking through the 382, all in a single day. So it's not looking good. And while we're talking about bearish engulfing candles, we're not just seeing this bearish engulfing candle on the daily time frame, we're not yet seeing it on the weekly time frame. But if we do come over to the monthly, it is of course the 1st of May. We do now have a new daily candle body opening for the Bitcoin charts over on btcusd. So if we do come over and look at this new candle for the month of May, this is already a bearish engulfing candle. We opened up at 29,300, and as of the time of recording, we're already bearishly engulfing the bottom of the previous April candle, which has a opening around about 28,370. So things are not looking too good right now. Last month in April, we did put in a pretty flat candle top. For the past 3 months, we've been kind of topping at this level. This is a major area of resistance, which we will talk about later again. But right now, like I said, we put in a doji candle last month signaling indecision, and we're getting a pretty decisive move back down to the downside right now, with a lot of oscillators like the daily MACD letting us know that we could be moving a lot lower. If we do come over to our next chart, we've of course also been talking about this bearish divergence, this regular bearish divergence, which has been playing out since Bitcoin has been making higher highs on the 14th of January, all the way up to this top up here at 31,000. A lot of the oscillators, whether you're looking at the RSI, money flow index, on balance volume, which we're looking at down here, are signaling that this is a bearish divergence. And as we've been discussing since 31,000, this looks like it's going to start coming into fruition very soon. This area over here also is looking like a very textbook TA pattern, which we will now talk about. Before we do dive into there though, I do also want to show you a potential new trend line. Now, we've drawn this a few different ways before. As you can see, we originally highlighted this major move back here on the 17th of April when we did break to the downside of this rising triangle pattern. This is of course still absolutely valid. Like we talked about before, from the swing high down to the swing low, we had that confirmed breakdown, reversion into the golden ratio, and now we're moving down with our price targets down here at 25,000. Why 25,000? We'll talk about that in a second, but I did just want to draw a potential new trend line that I do have my eyes on right now. It's a little bit ambiguous as how you want to draw this one. If you do draw it to this touch point right here, you can also see a lot of confluence right here, touch points here, touch points here, touch points here, touch points here, and then a rejection over here. This is kind of like a rising wedge with one deviation, one swing failure move, SFP pattern to the downside of this. You can also draw it like this, which is what I've got my eyes on. Really, this is valid, but also I did just want to highlight this because really, this is kind of like the last way that you can draw this pattern, unless you're drawing from these data points down here. But then, of course, you know, if we are drawing from there, you've got support around about 23,000. I just wanted to highlight this one quickly, because we're sitting right on this trend line right here at 28,250. And the last time we put in a daily candle body close beneath this trend line, we were literally met with a very, very quick 15% capitulation after closing a few daily candles underneath this. So we may see Bitcoin lollygagging around about the 28,300 trend line a couple of days before the FOMC. And if we do have that 25 basis points, which we will talk about soon, then I do think that we will catapult to the downside with a lot of these oscillators supporting that next move back down. But let's move over to our next charts. Why 25,000? Well, of course, this is the price target we've been highlighting for quite some time now. As you can see, there is support down here at 25,300. And if we do come over to the Bitcoin CME futures, we do have a Bitcoin CME gap to fill down here at 25,000. All in all, Bitcoin really does have danger below. What I've been highlighting on the channel is I don't really foresee too many price targets to the upside. We do have a CME gap to fill up here at 36,000. We also do have an unfilled CME gap to fill at 53,700, which I do believe we will fill in the next bull run, which I don't think we're in right now. What I do want to highlight on this chart over here is this is the pattern that I was talking about that you can see developing on these charts over here. We are currently forming a textbook head and shoulders pattern, and if we do look at this on a clean chart, you can absolutely see this is picture perfect. This has a neckline around about 27,200. If we come over to this chart, as you can see, once again, 27,100-ish, depending on how you draw it. There's a few different ways you can draw it. You could draw a flat line of support right here, or you could draw the uptrending line, which encompasses the right shoulder a little bit easier. Nonetheless, what you really want to keep your eyes on is round about this 27,000 region. If we do start breaking beneath this, then it is possible we could come down to the head and shoulders price target at 23,400. This will, of course, fill the CME gap down here at 24,800. We will then probably be getting continuation because we do have a bar pattern. There's a lot going on this chart, so if I do draw this out over here, you can see we've obviously had a parabolic rally, spiky top, spiky top, spiky top, spiky top, maybe one more spike back up to the upside to trap the late bulls, and then a catapult back down. This will be fulfilling this beautiful bar pattern down at 19,500. This is really picture perfect, so keep your eyes on this one. And of course, we do have a major CME gap down here at 20,300. So I know there's a lot to digest in this chart. What I really want to show you is these major price targets: 25,000, 23,400, 20,300, and of course 19,500. And really, to the upside, I don't see much more movement above 36,000. Now, while I don't think that we would be moving up to 36,000, I did say in the most recent Bitcoin video that if we do push up to 36,000, I will be opening a short from up here. Once again, I don't particularly think that we do move up here. I think there's a lot of price targets to start filling to the downside, especially after we break through the support at 27,000. Then I do have my eyes all the way down here at 25 in the immediate short term. This is really a price target we could quickly come to after the FOMC meeting. So in the lower time frames, my friends, that's really all I've got. In the higher time frames, what we've been talking about is still absolutely playing out. Ignore these few things over here. We will discuss those a little bit later on in the video. In the macro time frame, we've been talking about this major resistance box over on the btcusd chart. The last line of support is right here at 28,000, where we do have a few touch points. But really, you know, this major line right here, these are some of the major wicks that we did come down to as support, around about 29,000. 29,000 is a psychological level. We had support here. We had beautiful support here. We spent a lot of time trading around here. And if we do come over to the daily time frame, we are falling beneath this critical zone. 29,000 has proved itself time over time again to be a very strong level of resistance. Every time we've got above it, we've been rejected. 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 We moved above it. We came back down to back test it as support. We failed the back test. Then we pushed back up. We broke up. We came back down, back tested it, failed to put in a higher high, came back down for another back test, and failed to hold it as support. So we've literally not managed to hold this 29,000 region as support. And now, because of this rejection, As you can see, this bearish engulfing on the daily time frame is sending us right down to this final level of support at 28,000. We're literally right above this right now. So if we do have that FOMC meeting, and I will give you a spoiler, one of the major things that I will be talking about in my next video focusing on the FOMC, I probably will get some altcoin updates out before then, but what I do think is going to be happening for the FOMC meeting is, surprise, surprise, 25 basis points. Now, my thoughts on 25 basis points are really aligned with what Jay Powell has been saying. He's been religiously saying that we're going to keep on raising interest rates, we're going to keep on raising interest rates, we're going to keep on raising interest rates. The markets kept on not believing him month after month after month. He's kept on proving them wrong by raising the interest rates. So until Powell comes out with a pivot statement, then, you know, I will be following what Powell's saying. He's been saying we need to raise the interest rates. I still think we need to do that. If not, credit conditions will get tight if they do pause the interest rate hikes. Nonetheless, target rate probabilities are up at around about 95% right now. So it's looking like the markets are also believing we are going to get that 25 basis point increase. So for Bitcoin, if we do get that 25 basis points and then do break beneath 28,000, things are not going to be looking good. So all in all, in the higher time frames, we're still at this major area of resistance. On the monthly, we rejected from the top of this zone. If we do look at the weekly time frame, you can see there are wicks here that we have touched many times before. So when you are looking at the monthly, you might be like, where is this pink box over here drawn to? There are many wicks over here on the daily, and also on the weekly, we've got a lot of wicks right down at this region. We rejected from this, and since then, we have been moving lower. Total cryptocurrency market cap, as we talked about on the 10th of April, we beautifully reverted up to the 618 Fibonacci, and since then it's been pretty much only down. The total 2, which is the altcoin market cap, we didn't quite make it up to that 618 Fibonacci. We almost made it up. Then we had a bearish engulfing candle, and since then it's been sideways chop slash down. Altcoins are looking extremely weak right now, which is why we're seeing the Bitcoin dominance once again break out. If we come over to the daily, you can see we're putting in a little bit of a, well, we're putting in a nasty bearish engulfing candle today, while Bitcoin does break down. But I do think that this is going to continue breaking back up to the upside. The Bitcoin dominance may potentially want to retest some of these horizontal lines of support, and also potentially retest this bull flag before heading higher to my personal price target or target ratio up here at 53% for the Bitcoin dominance. All in all though, like we said, all of the markets are looking pretty bearish right now, running into resistance. But while the cryptocurrency market's been rejected brutally from the 618, the altcoin market is looking a lot weaker. So this is particularly why when you have been watching my videos, I haven't really been having any new trades open for Bitcoin. This is because if you do keep up with my altcoin updates, you know that I think altcoins are much weaker than Bitcoin right now. So where was the last video that we made? Over here, 2 weeks ago, we talked about how we were entering a new altcoin trade over on Cardano. So really, like I said, right now, while I'm seeing the Bitcoin dominance break up to the upside, I'm seeing a lot more reason to be trading altcoins, shorting altcoins particularly, rather than trading Bitcoin. So we are currently still in that KDA trade we've been talking about on the channel. This has broken down 20% on our 5x leverage since we did enter this. So we've literally just hit a 2x profit on our KDA shorts. So like I've been saying in my recent videos and also right now, I think there's a lot more weakness happening right now in the altcoin market. A lot of these altcoins are very close to breaking down into new bear market lows. And all in all, this is really why I'm focusing on trading some altcoins right now rather than Bitcoin. But we could have a new BTC trade come out. If we do have that FOMC meeting come out of 25 basis points, I'll of course keep you up to date on that. If I do see Bitcoin start to break beneath this critical zone at 28,000, I will be updating you with a potential new trade. And also if Bitcoin pushes up to the CME gap, where is it? The CME gap up here at 36,000, I'll definitely be opening a new trade. But I just wanted to give you a quick update on that front. The one final chart that I do want to update is this quadruple fractal. Now, we've previously talked about this fractal on just these charts over here. We talked about how, if we get rid of this, we talked about how the markets at Bitcoin's all-time high made a low, they pushed up, and they started to, break down. They made a higher low, and then they pushed up and made a higher high and made a slanted M pattern before breaking down to the downside. Now, while we had this slanted M pattern here, we have this slanted M pattern here. Over on the stochastic RSI, we had the same thing. We had a beautiful double top where we broke up higher. Oops. where we broke up higher, we had a higher low for the stochastic RSI, and we bounced up and double topped. Over here on the stochastic RSI, we had a high, we made a higher low, then we bounced up and made a double top. So this is the double fractal that we've been talking about over on Bitcoin. But if we do pull up some of our other oscillators, you can see we see this right now happening in the squeeze momentum indicator, literally at Bitcoin's all-time high up here at 69,600 or so. Yeah, 69,600-ish. You can see that the squeeze momentum indicator was in light green. And then the next week when we got that bearish engulfing candle, we ticked into dark green. Now over here, you can see Bitcoin topped out at 31,000. We had a bearish engulfing candle, and then the squeeze momentum indicator ticked into to dark green. Now, the last time this happened, like we said at the start of the video, Bitcoin literally went from all the way up here down about a 52 to 53% drop. This lines up with the double top in the stochastic RSI. This lines up with the squeeze momentum indicator move into dark green. Bear in mind, if you are looking at these oscillators, when Bitcoin's in a bull run, they potentially might move a little bit different. These oscillators don't always move exactly the same in a bull run rather than a bear market. So this is particularly why we're looking at Bitcoin since the all-time high. If we are going to be breaking into a bull market, then a lot of the time you will see these indicators flash slightly differently. Like for example, you can see a double top in the stochastic RSI up here, Bitcoin reset momentum, and then just broke higher. So obviously, we're seeing Bitcoin break down a little bit significantly right now. We do have further room to move to the downside on the stock. If we start to see the stock head down and Bitcoin not head down and then start to break up, that could be a different picture. But for right now, while the argument for bear market is still on the table, I think these oscillators will be moving like they have done before. You can also see quite recently the MFI, the money flow index, came up to 80. When was the last time we came up to 80? It was at Bitcoin's all-time high at 69,000. So we have price action. We have this double top in the stochastic RSI. We have this break to the downside in the squeeze momentum indicator. We've got this touch up here at the super overbought level at 80 on the money flow index, this quadruple fractal saying that Bitcoin could potentially be witnessing an absolute tear to the downside. And of course, with the FOMC meeting right around the corner, with all of these oscillators calling for a bearish move, with Bitcoin, the cryptocurrency market, the altcoin market at a critical level of resistance, you've got some bearish chart patterns developing right now. The MACD is also crossing bearish, and the Bitcoin dominance looking like it wants to take a tear to the upside. I think Bitcoin is going to be showing extreme weakness, and I think the altcoins are literally about to get decimated, pumping our short positions further into the profit. So for today, my friends, that's all I've got. Remember, in the immediate short term, we've got a lot of danger below. Price targets to fill at 25,000, 23,400, 20,300, and the BART price target down here at 19,500. As always, if you do enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. If you are in the KDA trade, I will be putting a new update out today for you. If you want to further support the channel, feel free to click the join button and become a member today. Make sure to follow me over on Twitter at 618_cowboy, where I do share a couple of these charts ahead of my YouTube videos. This is definitely a great place to keep up to date with my thoughts when I am away from YouTube. But yeah, like I said, all I've got for you today, my friends, it's been your boy Cowboy Trades. I'm out. Peace.